Good morning all and welcome to this morning's video. So I haven't made a video for a little while because I have had quite a lot going on in my personal life. As I've said in previous videos, my partner has cancer at the minute and my dog also has cancer. We had to take him to Edinburgh University last week to have a very large tumour removed. So that's done now. And now it's just about the recovery process. So lots of things going on in my personal life. I have tried to simplify my days ever so slightly by tweaking my routine a little bit, which is never a bad thing to do when you're trading the markets, to try and refine your processes, as it were. But let's get into these pairs. So I'm going to try and make these videos more regularly, but it is becoming increasingly difficult for me to do so. But where I can, I will. So my favourite of the bunch today is Kiwi Swiss. And on the higher time frames, if we just zoom out, let's just zoom out to the monthly, you can see that we broke below this all-time low, wicked below it, and then smashed to the upside, caught people the wrong side of the market, and then pushed to the upside, okay? And what I like about it is that not only did we wick all the way through it, but the body came very close to the area of value as well. It wasn't a great big wick where the body finished up here. It actually finished around about the area of value. So price doesn't necessarily have any business at this moment in time coming all the way back down here because it's already washed out the liquidity that was down there. Yes, we do have to be mindful of the fact that we have a very bearish monthly candle here, which is due to close in a couple of days. So I'm factoring things like that in. Okay, so we may, if we do push to the upside, we may push a little bit lower before we push to the upside because of that monthly close, if it actually closes the way it's looking at the minute. But you can see here we're stalling in this area of value here, and I'm just seeing this as a potential impulse correction continuation to push higher because we've broken below and broke back above these all-time lows. Okay, you might look at this and you might be thinking, well, that looks a bit like a reversal structure. Well, it does, but what's it responded off of? It's not responded off of anything to the left. And not only that, if it was a retest of something, it's narrowly missed the retest of the back end of that as well. So if we tapped into something here, that might have been a different story. You can see that we've had a deceleration in momentum here, or that's how it's appearing at the minute. So potentially we could be looking for a move to the upside to take out. Notice we've got some highs here which near missed to that high. That's often an indication that we're going to push higher. Okay, if we just zoom down, you can see that price has just squeezed into this area. It's just been a corrective channel. Okay, you can see here, so we have this corrective squeeze here. If we just switch to the line chart ever so quickly, that wick that was there doesn't appear, so that we can count that as volatility. We've just got this overall channel there. So all I'm looking for in this instance, given that this is the area where people tend to get themselves caught the wrong side of the market, so we saw the same thing, potentially the same thing. We saw people caught the wrong side of this low here, and then on the lower degree, we're potentially seeing the same thing where people are being caught the wrong side of this low, okay, before the move to the upside. And so what I'll be looking for then is I'll be looking for a break back above this area of interest, this AOI as I've got it marked, because if we broke back above there and we corrected afterwards, that would be confirmation that potentially something has shifted and that this corrective squeeze has come to an end, because not only would we be back above a previous high, suggesting a change in trend, but we would also by default be back above this trend line as well. Okay, and then I'll be looking to get long, okay, up to this high. We'd be able to manage that for about 3.5% up to there, and I would set a take profit here. I would measure the range here. So we've got the range there that we broke below, and that should, if I'm correct, give us about 5% to work with. Yep. And one of the reasons I would set a take profit there is I would anticipate price keeping going to take out this high, that this high near missed too, but it's worth noting that we have a sharp move here, okay, which was the start of this, okay, and there was enough of an exchange of liquidity here to cause a big runoff, and not just a big runoff, but a runoff which broke through all of these lows. So there's likely a lot of liquidity there, which means that even if price does keep going, price is likely to stall in that area for a little while before it continues to the upside. So that seems like a sensible place for me to take profit. And I have an alert set to see if we break above the area of interest. If we don't, then I can just leave this pair alone, because for all we know, this could just keep doing this, especially because of that monthly close, and that could be a bear flag to push lower. So just letting the market do its thing, and we shall see what it wants to do. Next up is Euro Aussie. So if we just zoom out, we have the high there. We broke above, caught people the wrong side of the market, and then pushed to the downside. We then have a slight near miss to that low. Okay, so we have a slight near miss there to that low, and a near miss there to that low. Okay, so it's highly likely that this may be let's try that again. It's highly likely that this may be an impulse correction continuation to push lower, because we don't necessarily need to come back up to here. And if we just measure the legs within here, so we have an impulse correction continuation within this potential impulse correction continuation, that would imply that this move is likely complete. Okay, so then I zoom down to the 4-hour chart, and you can see this is what I was talking about a minute ago on Kiwi Swiss. We have an exchange of liquidity here, where there was enough of an exchange of liquidity for price to smash through a previous low. Okay, so there's likely a lot of liquidity there. Okay, we're kind of also retesting the back end of this overall area there. Okay, so what are we looking for in this instance? We do have to be mindful. If we just zoom down, because I am on the 4-hour, there could be, we'll just look at this on the 15-minute. Okay, we've had a kind of near miss to this area here, so price could be forming, especially after all of this momentum to the upside, price could be forming a bull flag in this area to push higher. Okay, so in my opinion and experience, where that gets negated is if we break below here, what I've got marked as my area of interest. So very similar to Kiwi Swiss, but on the flip side, what I'll be looking for is a break below this area of interest, followed by a 5-minute continuation or a 15-minute continuation. And then I would look to get short on the breaker within it, depending on what it was, which one it was. We'd have 3.5% there, and then down to this low there, which is significant because we can see it on the daily chart. Okay, we would have something in the region of 9.5% to work with. And once again, I would use the mechanical management. I'll measure from that range. Let's try that again. I don't know when they're thinking about fixing Trading View, when you try and click on something and it just hasn't actually loaded up. But so we'd have about 8.5% to work with to there. So that is Euro Aussie, nice and simple. I have an alert set. Let's just put it just above there, because I'm interested to see how we respond to this area if we do come back down. And as I said, this could just be, once again, people getting caught the wrong side of this market, and potentially price tapping into the back end of all of this. We shall see. I don't need to guess what the market's going to do. All I need to know is what I'm going to do, and that is all I care about. This one looks potentially a little bit further from being ready, but I've just put it on watch just in case. So similar story as with Euro Aussie, because it's the sister pair. Okay, we've broke above here. I do actually prefer the break above on this pair, because if you look at, this is what I was talking about on Kiwi Swiss, if you look at Euro Aussie, if you look at the majority of this wick, didn't reach the area of value, this area of value. Okay, whereas with Euro Kiwi, it did. Okay, so almost all of the wick met this area. We reached this area by way of full-bodied price action before the wick above and the break back in. Okay, so these are more preferable and more likely to play out to the downside. But regardless, we have a low here which tapped into the area but didn't break below it. We have a low here which near missed the area. Okay, we also have an exchange of liquidity there where there was enough enough of an exchange of liquidity to cause price to smash through these lows here. So that's likely where the volume is. Another clue that that's the case is the fact that we've near missed to it, particularly here. We've near missed to that area. Okay, I am mindful of the fact that if we measure the legs, okay, that would actually take us back up to these highs. So I'm paying attention to this potential impulse correction continuation. But even if that was to occur, it may be the case that we come back down to here before we get that move. Okay, so it doesn't necessarily mean just because we've had this, okay, this is in play now. Okay, this might actually just be part of a bigger correction, which then moves to the upside, and then we measure this and see that this is an impulse correction continuation, just part of a kind of larger structure to the upside, if that makes sense. Okay, so if we just zoom down a little bit, you can see we potentially have a little reversal structure, a little ending structure lining up with that area of value as I've got it marked. Okay, as it's selling off now, it's starting to look less likely to be ready, but we never know what's going to happen. You know, it would take potentially just one candle to get us up to that area. Price might actually be coming back down to form a bit more of a base, well, because we have this sharp move which near missed to that. So perhaps we're tapping into that and then we push up. Who knows? We don't need to know. We don't need to guess. All we need to know is what we're looking for, where our areas of value are, and then we execute accordingly. So in this instance, because of all things considered, what I'm going to be looking for is a tap into the area of value. So that, okay, and then a break back down below the area of interest, okay, just because this structure is a little bit more less obvious. So just looking for a little bit more confirmation there. And then I would look to get short either with a 5-minute or a 15-minute continuation. We would have about 2.5% down to that low. And then once again, because of what I just said and the fact that this could be a larger structure to push higher, okay, where this acts as the base within this impulse correction continuation, it seems sensible to me to set a take profit down in this area, where once again, I would measure from around there to there, set the take profit there, which just so happens to tie in with where that wick is, okay, for around 7.5%, 8%. And that's what I'm going to be looking for today, folks. I've tried to keep this a little bit shorter than normal. You can see here that people are likely getting into the sells too early. You know, we got close to the area, we near missed to it, and then price failed to sell off, likely because the liquidity that's up there and being placed in that area is dragging price up whilst people are trying to sell this. So it makes sense why we're not committing to the downside just yet on this particular pair. Hope you've enjoyed this video, folks, and I'll see you again in the next one. If I can make one tomorrow, if my schedule permits, then I will do so. If not, then I'll see you again most likely later in the week. Have a great day, and I will speak to you again soon.